understanding your target market.
Turn down for what? Turn down for what?
Hey, what's up guys? So if you've been watching my videos for a little while now, there has been a consistent message which is all about understanding the target market. And I thought, why not, as part of the Property Investing Basics, do a video about how you can try and understand your local market or the target market that you're after. So in this video, I'm going to talk to you about why I think understanding the market is so important, and then some of the top tips that I think you can take if you're not local to your market, and some of the things you can do if you are investing on your doorstep. But look, as ever, before we get started, even though the sun is shining, I need you all to do me a huge favor, and that is to watch this video clip of me playing basketball over the weekend and literally scoring twice in my mate Wes's face. And then after you've watched that, do me a huge favor and smash the like button, and while you're there you might as well hit subscribe, and I'll try and bring you some more videos of me scoring in Wes's face. Okay, so enough of the basketball banter. Let's get straight into the video all about marketing. One of the biggest reasons why I am so passionate and so rigorous in why I talk about marketing so much is because it does not matter if you are the world's richest investor, best builder, most innovative designer. If you do not understand the market that you are targeting either to rent to or to sell, you are literally playing a guessing game. You are literally gambling with your project and your funds because you do not understand who is going to pay what you want for that property. And it's not just in property. Literally, some of the biggest corporate brands in the world spend millions, if not billions, on marketing and market research so they can try and understand what product to launch, where the gaps are, what's the growth area, so they can all try and maximize the sales, because they all know if you are not at the forefront of the new market, you will be left behind. And we have seen some of the biggest companies in history collapse because they didn't move with the times and adjust to the market. And property investing is no different. It's not exempt. You are not in a bubble where you can buy something and make it look really good and not hit a target market. The beauty of property is that you can get things wrong, but things can happen within the market and the industry that will enable you to make money if you hit the curve and the growth correctly. But if you don't hit it correctly, or we go into another pandemic, or we go into another recession or a market collapse, if you've got the market right and you've planned for the long term and short term, you should be okay. So the market, or the target market, or the marketing is so important. It's probably the most important part of any property transaction. And I say this and I speak from experience because I haven't been lucky in the property deals that I've purchased, and I haven't always bought BMV, and I haven't always done a great refurb. But what I have always done is target the market and understand where I think the growth is going to come. And that has enabled me to expand and evolve a property portfolio within the student market, which has massively shifted and changed over the last 5 and 6 years. And if you look at back some of the properties that I was buying in 2016 in a certain area where I could get like 6 students in these detached new build properties, and now we don't own any of them because we converted them to student houses, we got them rented, and we sold when the peak of the market in that area was happening. And now they don't make a great student house because you can't do all en suites. They're not all double bedrooms. They're not close to the university. And this is what the market is wanting. And when I say the market, I mean the growing market, the market that's going to pay maximum money for those types of accommodation. You might be watching this thinking, well, that all sounds really good, Dan, and it's great that you know your local market, and it's great to hear about how you did it, but how is that resonating with me, and how is that going to help me in my market? Or I don't actually live in the market that I want to invest in. Well, I'm now going to tell you how you can try and get into the detail and the understanding of the target market. But I must pre-warn you, this is not an easy challenge, and it does require some resilience and some hard work and time. So let's start with what you can do if you live in the area and if you don't live in the area, because you can do these things in both situations. The first one is to understand what is going on in the local geographical location and why it's got your appetite. Now, one of the most common reasons I hear of people investing in an outside of area that they're used to is because of price. And this is really typical from when Southerners or Londoners buy properties up north in like Manchester, Liverpool, Yorkshire, because you can pick up like a 3-bedroom terraced house for like 50,000-60,000. So that is really attractive for people who are just starting out or don't have a huge amount of cash, or they believe that they can get bigger returns and a bigger bang for their buck in these locations. We have to remember is that these properties have always been low relative to the southern cities and counties, and there are reasons for that. And if you start to delve into the market and what's happening in the local economy, you'll start to understand why. Now, I'm not saying these are dog shit investments or you shouldn't do it. I have definitely looked at it myself, and there are very good reasons why you should do it. What you shouldn't do is just jump into a deal because it's cheap without understanding who's going to be buying it or who's going to be renting it, or both. Straight away, we need to look at who is going to be your potential renter if you're going to hold on to the property. And this can range anything from a DSS tenant to an individual family to white collar professionals, right through to families and students, doctors and nurses. It has a huge, wide variety, and some geographical locations and towns and cities are driven by capitalists of industry. Some of these big, large corporations have their headquarters there, or the manufacturing plants in these areas. So it's trying to understand what makes that location tick. So if you are buying in an area and it is massively driven by one or two very large corporate bodies that employ thousands of people in that area, try and understand what they're doing. How is their industry going? What's making them profitable? What's making them loss-making? Where are their areas of growth? Are there any plans to exit that area, move manufacturing, go to an online presence? And how you do this is you go on Companies House and you read the full accounts, because it has the strategic report on there filed by the CEO or the managing director. Understand where the hospitals are, understand where the schools are, where the county and city halls, and what level of dynamics that has on the local economy and the local location that you're looking to buy. Very close to my student area in Norwich is the Norfolk and Norwich University Hospital. It's the largest hospital in the county, if not the region. So there's two moving parts to my location. I've got the student market, which is massive and booming, but I've got a secondary market there that I could tap into if I'm in between academic years short term, or I'd like to diversify my portfolio, and it's still a HMO product. So the product that works for my high-end student accommodation will work for doctors and nurses as well. And that's the type of dynamic that you need to be looking at in your local area. So let's say you've looked in the area and you understand that it's a DSS driven renter, or it's a massively retail driven centric place because of the shopper district, or there's a large manufacturer or retailer or corporate body that has their head office there. That is going to be your chosen market. And then after you identify your first and your secondary and maybe a third or fourth market that you can rent to or sell to, understand what's on offer for that target market. Who's your competition? And the best way to do this is to go on to Gumtree, to Rightmove, to spareroom.com, and all of these places, including Facebook Marketplace, and see what's being offered and for how much. One of the key things that I saw within my student market before I bought any student houses was that there was an abundance of 4-bedroom Victorian terrace with 1 bathroom student houses. There was literally thousands of them across the city, and they were in something called the Golden Triangle, which is a really desirable area for like trendy bars and restaurants and those sorts of things. But the shift in the dynamic of the students meant that they wanted to become closer to the university. There's nothing like rolling out of your bed into your classroom, and having like things like en suites and double beds was unheard of in these Victorian terraces. So I saw a gap in the market and I tried to capitalize on it. Try and see where the gaps in the market are for your location. Is there too many 4 bedrooms? Is there not enough ensuite rooms? Is there not enough double bedrooms? Is there not enough shared facilities? All of these types of things. If there's properties that are old Victorian terraces, they look a bit tired, do you need to bring something a bit more modern to the market? Look at what the competition is doing, look who is doing well, look who's charging the most for their rent, and look who isn't. And that will give you a good indication of where the growth is and where the decline is happening. Because if you see lots of 4-bedroom mid-Victorian terraces on the market, not shifting, and the prices are low, you know that's not the market to tap into. And then when you want to try and capitalize on it and you want to try some new ideas, don't just chuck your money into a property. That's like Wild West investing. That's like gambling. Do some test adverts. Try and find some pictures of the end result that you want to achieve. Bedrooms, kitchens, bathrooms, settings, types of houses, gardens, bedroom furnishings, all of those things, and do some test adverts. You'll soon see, based on the response of those test adverts and the price, whether there is a gap in the market and whether you can achieve great results and great returns based on that. But there is nothing like getting down and dirty in the local area. Go for drinks, go to coffee shops, go to local independent restaurants, talk to the waiters, talk to the owners, talk to the other customers. Try and get as much feedback to the local vibe, to what's going on as possible. So look, that is a really light-hearted, quick-fire, basic video all about property investing basics, but the most important part of it, which is understanding and targeting the right chosen market. I hope you found that useful. I hope you found the content rich, but that's it from me, and I'll catch you all on the next video.
Fire loud, another rocket shot.